So gear up, because tomorrow on Friday, we have non-farm payrolls coming out, and this is really going to be the one to watch. Good afternoon. Jobs week is officially here, so certainly a lot to cover here on this Thursday. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise along the way. So this week is really all about jobs, but I will kind of preface this by saying that this jobs week is important, not just in the sense of jobs, but also what comes next. So we've got jobs week this week, and a quick refresher that the Fed decision and press conference comes already again next week for the last one of 2024. So jobs data is very, very important as we look into what happens next week here. So the first thing I want to cover is the JOLTS jobs data that came out on Tuesday. One of the biggest takeaways from this was that we saw a pretty big change in job openings. So job openings were down to about 8.7 million, just shy of 8.78 million. And, you know, it's really interesting because with this data, we saw the markets were up really big on Tuesday. And we're back to this very strange relationship where, you know, if you think about job openings coming down and potentially job increases slowing, it sounds like bad news for the economy, right? Well, the reason that we're seeing this, and we're seeing bad news means good news type of situation yet again, is because this is basically another signal or another data point that the market is thinking that the Fed may likely be done as we look at rate hikes moving forward. So keep that in mind. Although, you know, I think the Fed has been pretty transparent from the last meeting. The jobs data is certainly a place that the market is watching closely. It's not just inflation, but jobs as well. And if jobs slow down, that could give the Fed a little more pause for concern as well. So again, bad news is good news in a way on jobs data here as we look ahead. So keep that in mind. Just yesterday, we had ADP employment report come out, and ADP showed that we added 103,000 jobs for the month of December. This was a little less than last month. So, you know, yet again, another data point to kind of suggest that jobs might be slowing. But of course, and for those who listen pretty frequently, you know, we take the ADP employment report with a bit of a grain of salt. And really what is important to watch is the non-farm payrolls number that we get tomorrow, right? So gear up, because tomorrow on Friday, we have non-farm payrolls coming out. And this is really going to be the one to watch as we think about what jobs are shaping up here for December and moving forward, and how that might relate to the Fed's decision coming up next week. On top of the non-farm payrolls report that we get tomorrow, of course, the unemployment report is in there as well. So definitely want to stay tuned tomorrow and see how that shakes out. The expectation is that we're going to have a pretty decent addition for December, depending on where you look, but somewhere 175,000, 190,000 plus potential jobs added for the month. However, there are certainly signals that could come in quite a bit lower than the expectations have suggested. So similar to the other jobs data points this week, we want to watch that really closely. And again, if this does show a signal in the wrong direction, although that sounds strange to say, but nonetheless, we could see even more speculation that the Fed might be done with hiking rates from that data point. All right. One of the things I want to cover a little bit outside of all this, but definitely related to the Fed, jobs, and interest rates, is what is going on in the bond market lately. So for those who do listen pretty frequently, you know, when we were sharing some thoughts in 2021, we were kind of pounding the table to be really cautious of interest rates and bonds, because the general relationship is that when interest rates go up, bond prices come down. Now, the reverse is true as well, right? If interest rates come down, bond prices can also go up. And the reason I'm sharing all this is because what we have seen since the last Fed meeting has been pretty remarkable. The 10-year Treasury, so in other words, the rate that you would receive for buying a 10-year bond, has dropped from 5% roughly all the way down to under 4.2% right now in just a matter of a few weeks. So this has been something we've been paying a lot of attention to. Certainly a big shift compared to what has happened for basically the last, let's call it, 20 months, where interest rates have continued to rise and rise and rise. Now, there's been periods of volatility there, but for the most part, interest rates have been on the rise this entire time. Clearly, the bond market thinks that the Fed is done, and clearly the bond market may also be pricing in that the Fed might be having to do more cuts next year than they originally suggested. So this has been very interesting to see. It's something that, as of late and into this year, we've been talking about adding duration, or adding bonds, so to speak, into the portfolio kind of slowly and methodically. And this is why, because again, as interest rates do come down, we actually see bond prices increase as well. So very interesting to watch. We'll continue to kind of keep you up to date on the bond market as well as the stock market as well. But definitely stay tuned. Again, next week we will be covering the non-farm payrolls, but we also have not just jobs, but CPI and PPI, so inflation, and of course, the Fed meeting on Wednesday. What I will share is that I don't expect a whole lot of change from the Fed in the meeting here next week. Although, who knows, something could certainly surprise us. And if so, that would be a huge shock to the market. But I don't really expect any change here from the Fed. It will be interesting to see what they share as far as, 2024. But as you probably are very well aware, those projections are just that, and the reality is they're going to adjust as the data comes in. So don't take that too heavily in terms of how you look at the markets moving forward. But we'll be sure to catch you up next Thursday, kind of debrief what the Fed shares on Wednesday. Before we break here this week, a quick question of the week, which is maybe more of a public service announcement reminder. But basically today is the end of Medicare open enrollment. So we just wanted to share that here today on December 7th is the end of Medicare open enrollment. Hopefully you got all that squared away if you were making any adjustments. For those who are continuing, obviously not the biggest deal, but I did want to just share that here as a quick reminder for those who are, Medicare eligible. So thank you so much for joining us here this week. We will see you next Thursday at 3 p.m. and really excited to break down the Fed conversation there next week.